In this video, you are going to learn the biggest crypto catalyst that is not the Bitcoin ETF coming up. We're going to pay attention to dates Jan 5, Jan 16 plus 15. You'll understand that in this video. If you stay to the end, you'll understand why the UniSwap decision is so critical for what's about to happen. This is big. And we'll talk Coinbase versus other brokerages like Robinhood. I don't know if anybody's really paying attention to this one, so buckle up. Let's get into it. There's a major catalyst on the horizon for Bitcoin and the entire crypto industry. And no, it's not the ETF for Bitcoin. Sure, that's a catalyst as well, but this is a potentially bigger deal. In fact, this could be what ends up holding back the BTC ETF for just at least a little bit longer. But let's just say this could be some really good news, what's up on screen right here. So let's understand this. This right here is actually an order that has been signed by the SEC, by folks over at Coinbase, and the judge presiding over this case between the lawsuit of the SEC versus Coinbase. And this order demands that on January 17th of 2024, oral arguments on the motion for judgment will be made. There will be about 4 hours of oral arguments to be divided equally by each side on the 17th. And there are some really big, important implications for this. First of all, what does this mean? Okay, so let's understand this. So basically, here's how this works, and this is critical. First, the SEC sues Coinbase. That's step number one, okay? Hey, we think you're an unregistered brokerage selling securities, and we want you to sign up to be a national securities exchange. That's basically what the SEC is saying. Coinbase says, you're wrong as a matter of a law. So they file a motion saying, look, judge, we just want you to throw this out. Look at this case, look at the facts and the law the SEC is using, and agree with us that the SEC does not have a leg to stand on. Then the SEC can respond to this statement, and then there's a reply after that. Okay, so there's a little bit of back and forth, and then the judge makes a ruling. And so when that judge rules, or before that judge rules, usually what they'll do is they'll listen to oral arguments, and they might even sometimes issue a preliminary ruling as early as the night before. So potentially on January 16th, mark your calendar for that. Look for potentially a preliminary ruling. This is kind of like a cop pulling you over and saying, pretty sure you ran the tickets or you ran the stop sign, so I'm going to write you a ticket. And they kind of come up to the window, you ran that stop sign, right? I'm like, well, can we talk about this, right? So that's sort of this potential for a preliminary ruling, is that judge suggesting, here's what we think is going on and which side we're likely to agree with. It's entirely possible that this judge right here, the Honorable Catherine Polk Fela, anyway, it's entirely possible that she could rule the SEC has no leg to stand on via the preliminary ruling as soon as January 16th. That'll be a big catalyst. Or after listening to the oral arguments, which could be on the 17th or maybe even up to 2 weeks thereafter to file the final ruling. And the ruling could either be Coinbase is right, the SEC doesn't have a leg to stand on, which might mean the idea that crypto as a security is potentially dead forever, or at least you'd have a pretty strong legal precedent here that that is dead forever. And then the SEC might go poof in terms of being able to sue Coinbase or arguing that Bitcoin or other cryptocurrencies are a security. That could be a pretty big catalyst. So anywhere between January 16th and two weeks, 15 days-ish thereafter, we're expecting some pretty big groundbreaking rulings here out of the legal system on crypto. Now, there's a big problem with this. The big problem with this is right here. Look at this. The ETF approval window technically expires between January 5th and January 10th. That means a lot of the Bitcoin ETF hype could potentially fade between January 10th if we don't get that approval And what happens with this case? I think a big highlighter will be cast over this case. Because let's say the SEC loses here. The SEC might say, all right, well, it looks like we'll approve these ETFs in the next round of approvals. In other words, blacks, all these, crypto ETFs will end up just refiling, so to speak. And then the SEC would presumably be almost cornered into having to prove or approve or qualify these ETFs, since technically they don't like the phrase approve. Or if the judge comes out with a ruling that says, you know what, we're going to let this case actually go to trial, to kick the can down the road a lot. That is, of course, assuming the SEC is waiting for the outcome of this case to actually approve the ETFs. It is entirely possible these ETFs could get approved and the lawsuit continue. So we don't know exactly. But what I will say is, while most people are bullishly right now watching this ETF approval window, a lot of folks are forgetting about this ongoing lawsuit, again, between the SEC and Coinbase. Now, this has a lot of implications. First, I want to make it clear, Coinbase is making a very strong argument. They're saying the SEC's authority is limited to securities, and not every parting of capital in the hopes of a gain qualifies. They actually, in my opinion, give a fantastic example. The example they give is right here. Look at this. Consider an artist who sells paintings over Etsy with a note that she is planning to exhibit her work in a gallery next month. Those who read the note might buy the paintings, hoping the artist's plans to increase her exposure will drive up the value of the artwork. In the SEC's worldview, every single sale of a painting on Etsy would be a securities transaction. This, by the way, is literally one of the arguments Coinbase is making. In that lawsuit, a judge is expected to potentially make a preliminary ruling on January 16th, and a more final ruling within the 2 weeks thereafter. So these are some huge catalysts, but this is not all we've got to talk about, because there's a lot to talk about in terms of Coinbase and the future of BTC pricing. Take a look at this, by the way, just so you can see it here. This is the SEC's argument. Coinbase has never registered with the Commission as a national securities exchange, broker-dealer, or clearing agency. These things will become very, very important for the future of Coinbase. But in the meantime, you know what else is interesting? Look at this. Ford, yeah, the car guy, Henry Ford, from like 100 years ago, actually about 104 years ago, predicted or wanted to replace gold with a, quote, energy currency, and thought by taking away the money printer and the power, so to speak, of the government, maybe there would be less war. And boy, that sounds a whole lot like Bitcoin. Now, next, I want to get into a little bit of what an ETF approval could mean for brokerages, specifically companies like Robinhood versus Coinbase. Which company might benefit more from an ETF spot Bitcoin approval? Coinbase or Robinhood? We'll also talk about the future of Bitcoin's price. But first, message from our sponsor. Hey, so many of you have been asking how hard it is to actually go live on multiple different platforms at the same time. And I want to show you here how easy it is. So let's just do it raw together. So watch this. This is Streamyard.com. And all I have to do is go over here to create, add a live stream, and look at this. I can pick the Meet Kevin channel to go live on. And if I want to multi-stream to Twitch, I click that. Twitter, I click this. And then I could go, I don't know, we'll type in something like Moon live stream. And then we can go ahead and schedule that for, let's say, 2:15. I can upload a thumbnail if I wanted to. And then I can create live stream. And when it's time to go live, let's, for example, unlist this for a moment so we don't actually go live on Moon live stream. But when it's time to go live, I simply have this live stream created. I can pre-schedule that, enter studio. And then once I enter the studio, I can simply hit go live. Obviously, we'll add our camera and our network over here, but that's how simple it is to go live with Streamyard. So if you've ever wanted to know how to go live and make your life really easy to multi-stream, check out metkevin.com/StreamYard. Yeah, look, I use Streamyard every single day. So even though it's a paid promotion, it's a product I use every single day, and it's great. But for now, let's talk Coinbase. Did you know that 85% of Coinbase's volume, that is how many transactions were happening in dollar volumes, are institutional? 85%. That means $85 out of every $100 institutional. Now, about a little over 1/3 of all of the transactions are Bitcoin, about 38%. But do you know where Coinbase gets most of its revenue from? I want you to think about this. Do you think Coinbase gets most of its revenue from that 85% institutional trading or the 15% retail and consumer trading? Well, here's your answer. Right here. 85% of transaction volume might be institutional, but it only represents 4.8% of transaction revenue. Instead, almost all of Coinbase's transactional revenue comes from consumers. And so now there's a big question. Does Coinbase's profit potentially from consumer Bitcoin transactions, well, which let's call it about 100 mil of that, right? Let's say right here, 100 mil of this is BTC transactional revenue. Does that potentially go away if a lot of retail can potentially trade Bitcoin in ETFs rather than on Coinbase? That's just an idea. I'm not saying that's exactly what's going to happen. And Coinbase has a benefit, including custody, which we'll touch on in just a moment. But think about that for a moment. In order to actually trade an ETF, the trading must be done through a broker-dealer. Guess what Coinbase is not? A broker-dealer. We just saw that in the lawsuit. So Coinbase can't actually trade Bitcoin ETFs, but they can trade actual Bitcoin, and they can custody the actual Bitcoin, which may be the underlying of an ETF. But is it then possible that companies like Robinhood or Fidelity actually end up making more money off of a Bitcoin ETF than Coinbase does? Some people say yes. Other people say, don't worry. Any loss over here of consumers basically just buying spot Bitcoin through an ETF would be made up by this: custodying crypto revenues. A lot of folks believe that Coinbase is going to charge somewhere around 10 basis points for crypto custody services. Now that's a complicated word, but let's just make it simple. For every $100 billion that goes into Bitcoin ETFs that are custodied, which means actually holding the real Bitcoin that's underlying that ETF, every $100 billion that goes in would generate about $100 million of Coinbase revenue at 10 basis points. Now, it's possible custody services could compress and maybe the fees for that will go down, but Coinbase seems to be positioned to make this custody fee revenue explode even if this goes down. In my opinion, this is actually part of that explosion of other or phase 2 income for Coinbase. Back when Coinbase IPO'd, I mentioned that Coinbase was likely to face a V-shaped sort of recovery in the future. And what I was predicting was that in the future, I think transaction revenues will actually decline and other revenues will go up: custody services, lending services, and otherwise. And I predicted that could lead to some volatility in the stock, which it certainly has had volatility. Now, we might just now be at the beginning of the takeoff of phase 2, which, if you'll notice, is already exceeding the revenue of phase 1. Phase 1 right here, just transactional revenue, $288 million. Phase 2, the other revenues are already at 334. So that could really blow up. You could really see this go to zero and this really blow up even further. So that's a potential for Coinbase. So something to pay attention to. We're not entirely sure what's going to happen, but here's one thing that we do know. Here's a comment from the suits, and the suits are saying, not only is there excitement about the halving next year, the expectation of an ETF approval, but also the regulatory house cleaning of frauds going to prison is actually a fantastic positive catalyst for crypto, because you're really cleaning out all the crap. Not to say that it was crap, but BUSD just got delisted over at Binance. They delisted their BUSD as Paxos walked away from the partnership. You just had a 13th firm, a Swiss firm called Pando, one letter away from Panda, take the 13th spot for expected BTC ETF approvals, or hopefuls, I should say, ETF BTC ETF hopefuls. There we go. Let's get those letters right. But anyway, you can see a lot of them here using Coinbase. You've got not only Grayscale, ARK, iShares listed as Coinbase, Franklin listed as Coinbase. You've got one over here at Fidelity. You've got some NAs or TBDs, basically. And Binance had an interesting blog post, actually, referencing Binance. They said the historical case for gold ETFs is worth examining. Although a spot Bitcoin ETF cannot be expected to produce a similar effect, when we go back and look at history, what we saw is when we introduced gold ETFs, GLD, the largest gold ETF by AUM, we saw the ETF go from 1 billion in assets to 50x in 6 years between 2004 and 2010. Now, in fairness, gold was also very popular after the Great Recession, and 1 billion to 50 billion would kind of be a drop in the bucket for Bitcoin. We'd hope that there could be a lot more. Remember, Coinbase makes about $100 million in revenue for every $100 billion they're custodying at 10 basis points, if those end up being the numbers. So you really want to see BTC ETFs explode to help Coinbase. Otherwise, ironically, the brokerages might end up making more money. Interactive brokers, whatever. Anybody who's letting you trade that ETF. Obviously, Bitcoin has done fantastically this year, outperforming not only world stocks, gold, bonds, and commodities, as you can see here. Commodities actually negative for the year. But take a look at this. I thought this was a great tweet. Reminder, Bitcoin is not at an all-time new high until we break 78,000 because they inflation adjusted by 13.5%. I would actually inflation adjust from 21 to now at about 18%, which would mean that number should actually be about 81,000. But we could argue that. And then, of course, you have the sort of mainstream, more fuddish stuff that goes around on Twitter, which I like reading it just to see what other people think. And so for crypto, there's no inherent value, no cash flow, no yield, no employees, no management, there's no balance sheet, no product, no service, no history of operations, no analytical valuations, no earnings reports, no proven track record of reliance, blah, 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 blah. Anyway, so basically this person goes on to say this is a greater fool than I FOMO market. And this person had some prompt responses on Twitter, which worth noting, he's also followed by Gordon Johnson, the Tesla bear. We visited him at his house. He's actually a nice guy in person. These were some of the replies that happened. I'm glad there's no market manipulation in traditional markets. Another one. Cope, John. Another one. All that word salad when you could have just started with, I don't actually know what I'm talking about. Sounds like you're describing the whole financial market, really. Wow. All right. So this right here is the, there's some talk right now about Bitcoin basically being overbought, as you can see via the relative strength right here. Gives you a little bit of a chart, although a lot of people are saying, oh, there's the inflation calculator again. We had that twice. This is actually what I wanted to show. A lot of folks very excited that Bitcoin is now a top 10 by market capitalization asset. Gold being number 1 at $14 trillion, meaning Bitcoin is not even 10%. It's barely over 5% of gold. Apple sitting at nearly 3 trill, followed by Microsoft, Saudi Aramco, Alphabet, Amazon, Silver, Nvidia, Meta, and then Bitcoin. Notice Tesla not in that list. So what did we just learn? Well, we learned we want to mark our calendar potentially for a preliminary ruling on January 16th. Then we want to look at about the 15 days thereafter, as well as, of course, Jan 5 to 10 for that ETF approval window. The Jan 16th maybe preliminary ruling, and the 15 days thereafter to see, is Coinbase going to get stuck in the mud or not? This could be a really big catalyst for cleaning up crypto regulation and getting some really good precedent from a judge. Worth remembering that the very judge that's involved in this case back in August suggested that Bitcoin and Ethereum were commodities. That was actually decided in the, I believe it was the UniSwap case. Yeah, it was the UniSwap case. Lawsuit against UniSwap. The same judge argued that Bitcoin and Ethereum were commodities and not subject to the SEC's regulation. So you have some potentially really good bullish catalysts here for the cryptocurrency market. I personally think in the future we're going to have our S&P 500 and NASDAQ of crypto. It's going to be a game changer. So stay tuned, and we'll see what happens. Thanks. Bye.